Following on from yesterday's video, first of all a quick look at how the portfolio is performing. So over the course of yesterday, gave back about $600 or $700 to the market. Let's take a look at some of those trades and what went wrong. Just look at the last yesterday and today. So overall, we gave back about $440 with a further $200 in the red for this open position. Most of the damage was caused by the euro pound. And this is an algo that I turned off today, which works very well in a trending market, but in a sideways market or range bound market it doesn't work very well. But before I take a look at that, I want to continue on with an example from yesterday, which was the USD Swiss franc. So on this pair, overall, it has been a successful trading strategy since early or late October. And yesterday, when we were making the video, I opened up a long position when the price hit the trend line. The price then broke a lower level stop trend line, which we'll take a look at in a moment. And as a result, switching from a long to a short position with a loss of $135. I then had a MACD indicator which was set up to catch any change of trend, and that closed out, recovering the loss and actually making a bit of a profit. So overall, after the loss and catching the trend, up about $300 after that. So if we take a look at that strategy and see how it was put together and explain the logic. So we take a click on this link to see the chart. So as discussed yesterday, I had a buy to open when the price hit this trend line. So when putting together this order was buy to open, 100k at market, and the rule was if no position. So that means if it keeps bouncing along the trend line like it did here, you only buy once. So if no position, buy to open, and do not change the alert status, so just leave it active. Okay, repeating every minute it keeps checking to see if the price is falling below the trend line, but once it opens up it only makes one trade. So if I take a look then at the sell to close, which was the ideal outcome, the price was hitting support, rallying to this resistance trend line, and the rule was sell to close on the K lot if long. So that means if it hits this line, and if I have a long position, it would sell to close the position, and if it kept jumping either side of the line, if I had no position there because I've already sold, no further action would be taken. Now, as I said yesterday, I have a stop trend line which sat below the trend line that I used to buy to open a position. So my machine is running slow with the video software and the recording process. This trade was set up, so yesterday when we were recording, we had bought about this point, and I had an alert based trade set up that if the price falls below this trend line, so if it falls below this trend line, I want to switch, so that is sell to close any long position and then sell to open a short position. And for example, if you use sell switch, if you do not have an open position, then it will just sell to open. So in this scenario, it's sold to close the long position, then sold to open a short position. When the rule was executed, first of all, it only executed if I was in a long position. When that happened, I set the on event field to pause the active rules and activate the pause rules. So yesterday, if you look at the previous video, I had these three rules running. This one was paused, and when the trend line broke, when the price broke through the stop trend line, it activated this rule. So this rule was when there's a positive MACD crossover on the hourly interval, so it happened around here, close out the short position. So I sold to go short here with the attempt to recover the loss from buying to go long just before it, and then riding the trend out using an hourly interval. And for clarity as well, on the sell switch, when I'm opening for my normal buy to open and sell to close for the ideal trades, I use minute based trend line alerts, and for the buy switch, or for the sell switch, I'm using hourly interval trend line alert. And that is because I do not want to get spiked out of a position just because the price spikes through on a 1 minute candle or a 5 minute candle. I want a clean break in the trend, so that's why I use an hourly interval for the sell switch. So price broke through the trend line, close it out on a MACD, change of trend. Okay, tomorrow I'll take a look at some of the automated trading algos and maybe take a look at why the euro pound algo stopped working and what you need to watch out for when using automated trades.